Hello, players. I'm always sad but truthful. I guess player one in this case was the first one to see. I'm here talking to all of you now because our future's being threatened by people who will stop at nothing to win this game. And some of you already know this, and you've lost more than just your stuff, or your houses, or your money. Some have lost their freedom, and some have lost their lives. And now this. And I only come here to escape this shitty hand that life has dealt me. And I stayed, like many of you, because I found something much bigger than just myself. I found a cause, and I found my friends when I found GameStop. And I don't want to lose that to these colossal douchebags. They think we're all too distracted to even notice. They think we won't even put up a fight. Well, I say they're wrong. This game, this game is our game. And in this one fell swoop, I rolled the dice. And I hope that it activates the Iron Giant. And I ask you to join me in this game. This is now the greatest game of our entire lives. I hope that by my posts that I have helped you see there's a pattern built into the system that is working against us in a way that isn't fair. With that said, I hope that you enjoy my presentation. I'll do my best. I am not perfect. I have dogs in the background. There might be noise. I'm gonna mess up. But if you're patient with me, I will show you. I love you guys. So, the way to wrap all this up, it made so much sense today. Our first friend, he was really good at fundamentals, right? He had a way to look at the future of a company according to their numbers and to throw technical analysis. And I'm not going to go over fundamentals. They've been gone through. The fundamentals got better. And the technicals, they just didn't seem to make sense to me because it's just so inorganic. Nothing made sense. And I wondered why. So, I learned the financials. No one taught me this. I sat among you and I taught myself, so I know that you can too. Especially with my help. Let's begin. I'm ready to play. Here we have the Fintel institutional ownership for GameStop. We can see that they are still, according to Fintel, 71 million shares outstanding. Now these would be Class A shares loaned to other institutions. We can see that these guys have 36 million shares. That would be according to the board. Now when we look at their chart, we can see the institutional volume has always been really well placed. And while the chart itself, we can see a low price. What was it, $40 in the beginning? And over time it changed, and it changed. And it was neat because somewhere around here, Birdie, and he saw something in the company that I dare say a lot of people don't see. And I studied Birdie's portfolio trying to understand him. What does he see? How does he invest? I would like to survive this bearish time in our market. And when I looked, he saw GameStop. And when I looked into this farther, somewhere around here, Cohen. And then there was this beautiful person who seemed to just see something, and it was just on his list of stocks. And I say these guys aren't foolish. I say they're probably much more educated than most of us, me included. But I think they saw something. And I dare to try to find out what it is. So, we can see that around here we were at a low of $2 to $3. The company almost went under. Toys R Us, Blockbuster, any of these, we can stare at the charts and see the same pattern. But there's something interesting that happened after this. We got distracted. And then all of a sudden the institutions didn't have to hold their positions anymore. The only one that has reintroduced themselves after, just for the record, is BlackRock with 9.2 million shares. I believe they bought in with 11 million at the time and then reloaned the 2 million out, if I want to be factual. But we can see that we reached a high, according to this chart, of 350. which is still wrong because I watched it go to $500 that day. I was there. I got in somewhere around where? How funny. I bought in above this line, so I know this chart, the actual trend, is a little off. I got in at 360. I still have those. So now that we know the highs and the lows and the time frame of since January, it's reached, I would say, $500, and it's reached a low again of $40 and came back. So when we look over time to see their institutional puts and calls, we can see that they've always had a heavy put position into GameStop while also trying to get a sign through calls in a strange way. So there's an obtaining and a removing factor there, but we can see that they really stepped up the puts right when they had to. And again, when they had to. And there's no institutionals for them to put no more. There are no more. And going through the institutionals, we can see the time frames of when they got in. And it's interesting because Cohen got in at a certain date. He did. This guy is beautiful. You see the change percent? He never moved a thing. Must asset? Gone. FMR? Gone. Donald Foss? Gone. State Street? Half gone. Dimensional Fund Advisors? Half gone. BlackRock? A quarter gone. Vanguard? 11.59% gone. That's interesting because from here on, they sure got in at an interesting time, didn't they? I'm just going to skip that. That's in my other video. It took me a long time to go through those. The focus of this video is down here. And I dare say that the patterns that I have tried to show you are going to be presented in front of you of a certain amount of companies. And I don't care how long this takes. If you are patient with me, I'll show you. American International Group, return 67,370%. I'm not going to waste time. Let's go into this. First thing, disclosing ownership of 200,000 shares of GameStop, 0.2% of the company. We can see that they have had a good positioning since 2015, increased a little bit by 16, and they don't have any left. They're almost gone. We can see their institutional involvement in 2013, 2014, I'm going to say late quarter, and that would be over to mid to late 2016. They had great positioning. I'm not really sure what's with this Blumpkin, but when we go down a little bit, we can see in the time periods, for this last time period, they've made 67,000 shares, 67,000% return. And I don't know how. So let's go over here. Cost basis, negative 3.3 million to get a 4.7 million return. And the change in allocation is a negative. So I don't get that. Maybe you guys can explain it to me. In March, they were picking up their shares for 9 cents. In December, they were picking up their shares for 1 cent. The volume doesn't even matter to me how much. I don't like those prices. That's possible. I remember what it was. We can see a negative percent return with a negative profit and a negative cost basis. You want to go into 13F and we'll confirm this 1 cent per share. I would like to show you that I spent hours crawling the 13Fs just to be able to show you guys these things. 38,000 shares for 721,000. Gee, that doesn't line up to what they said. That doesn't even line up to the time frame, does it? Go back. Corporate Class A. So listen, this holding had board shares that were loaned to it, which is interesting to me. We can see that they are the owner of the Class A shares. Okay, let's go to the next one. My purpose here is to go through the entire portfolio. Whoops, going back. Told you I wasn't perfect. This is going to be pretty good for you guys. Wrong button. Control W and Control Q are real close, you know. Going to their fails to deliver. Apparently I'm going to pull this up right now. We can see that they were shorting it to death since early 20. And that at the end of 20, there's this interesting spike in progression. And I remember that. This says over 2 billion, but we all know there were three. I don't care about the numbers. I don't like the FTDs, and I sure don't like this spike. That's unnatural, not professional, not organic. Get that off my screen. Now, when we go back to the return percentages, and I'll go through these. Prelude Capital Management on puts, 1.276 shares. They made 49%. That's 1,000%. 131 million cost basis to make on top of that 110 million, but somehow they made 49,000%. Let's look at it. That's interesting. So we can see they don't have anything now. When did they position themselves? Old school. Then we can see they took major positions in 18 and 19, just slightly. And then in 2020, they just decided to go all in for one sector, which I'm not sure. That price point was so delicious. $3, $2, who knows what it was then. We'd have to ask our friend the kitten. But when we go to the chart, we can see their exact timing of when they had puts positions does not line up when they own the underlying. I find that interesting. Okay, inorganics. Time frames here. Early 2021, they had no positions. Late 2020, they did. So let's go to late 2020. That would be right here. We can see that they were paying 14 per share for 10,000 shares. Cost basis was a negative 44,000, and they earned 100,000. Neat. We can see back in 2019, they made negative 1,255% because they had a 285,000 cost basis with a return of negative 25,000, a change in allocation of 11,902%. That's interesting to me because how do these numbers line up? $6 on 47,000 shares. Shares changed. That makes sense. You know, I can believe that number. I can't believe this number, and I can't believe that one. Interesting. So you tell me there's a possibility of actually changing an allocation on 47,000 shares that they can take it to 11,902% change in allocation with a negative over 1,000 return? Let's keep going. Calls. Bluefin Capital Management. Price, that's pretty good. $42 a call. And this is in May 17. They made 4,300% with a cost basis of negative 12 million and a profit of 13 million on top of that. Mathematics, guys. So let's go into their position. You can see that they still have the latest disclosed value is 7 million and they own 41. It's simple to see. What I'd like to show you is with the total holdings value at 7.8 as of 2021 3/31. They had a previous disclosing position of 35,000 shares, almost 36, at a value of $675,000. A change in shares of 15%. That's interesting. Let's look at when they chose to do this. And mid to late 2020, they took a big position of 36,000 shares. And then right around squeeze time, they chose to repartake themselves with around 42,000. I think that's safe to say. When we look at their actual call put spread, that's what I find interesting. Why would they take such a large call position if they weren't trying to position themselves to actually profit of anything? And a large put position. These time frames are interesting to me, but I know the time frame of what our GameStop has been through for this whole time. When we look at how much they made from their equity positions, we can see they made 978%. They paid $582,000 to make 6.6 million back when they paid $104 a share. Okay. Change in allocation, 831%. Really? How do you reallocate your position 8 times? When we're looking at their call options, 517, that's this year, very recent. The filing date was 3/31, so this is going to be after the squeeze. They made 43%, 12 million in the negative cost basis with a profit of 13 million. They paid $42 a call. Pretty good, right? Their put positions earned them 2,935% when they paid negative 5 million, almost 6 million, and got 9.5 million back. Change in allocation, 836%. They paid $39 per put. That's interesting. Let's keep going. Here we can see TIAA separate account, VA, stock index account, teachers personal annuity. I don't even know why they would hop in game. I don't know what the hell they are, but we can see that they made 3,300%. They paid 143,000 and they made 166,000. And somehow they made 3,000% on that. Let's look at this. We can see here they used to have a holding of 314,000. Before that, it was $5,000. God, I wish I had that to get in this personally. This is interesting. Why would they buy all these if they weren't going to stay? Did they not like the stock? I mean, we like the stock. These fundamentals are good. We can see the date, and I just like to focus on squeeze time forward on most of these charts. If I see some funny numbers, I'll point them out. But I just really like to be when most of us got in and afterwards. And I heard about it here, and I got in here, and I've been here till here. I know you guys did too, so that's why I'm doing this. On 3/31, they reported GameStop equity class shares that they made 3,329%. Once again, they paid 143,000 and made 166,000 on it, but they had a change in allocation of 5,596%. Damn. So who would they be trading that back and forth with to be able to get these things, to where they make 3,000%? I mean, $100, that's a great price. I would have stayed with my position. Complete upside in the company. I mean, I see where they're going. There's a lot of beautiful things in the background, 3,144% from PIMCO, Rafi. We can see that they paid negative 337,000 to earn 409,000 on top of that. This number is interesting to me, so I'm going to look into it. Right now, they only have 449 shares. That is so much more than me. That's 90 times more than I have. Do you guys know I only have 5 GameStop shares? I'm probably one of the poorest ones among you, and I'm doing this. I'd love it if you played with me. 85,000. And this is coming from a value of 13,000. So let's check out exactly what they made. GameStop equity class. We can see they made 3,144%, and this is on top of the last reporting section, which is interesting. A year ago, they made a negative 38% when they paid negative 2,000, and they profited negative 10,000. That's understandable. I mean, I would have held my position. I'm a diamond hand, These institutions, I don't think they like us unless they're able to make 3,000% plus profit while paying a negative cost basis. While we're at it, if you can explain in the comments, how is a negative cost basis possible, please? Especially when they have a change in allocation and a return profit rating. 641%? Damn, that's interesting. Let's keep going. Here we can see DTMX made a profit of 3,000% while not paying anything and profiting 970,000. So when we go into their position, it's quite easy to once again do the same thing. Let's just go through and look for patterns. They had high, older positions going back to the middle of 19. In the middle of 20, they chose to lower their positions. Okay, I can expect that. It's normal looking. But then we come down here, and we can see that they had a negative cost base of 1,000. That's interesting. When you exit your position, how do you have a negative cost basis if you don't have anything? Followed by a return of 3,000% when they didn't pay anything. And over here, 168% when they didn't pay anything. There's no cost basis there. But for that 3,000% return, they had a change in allocation of 2,611% on 3,000 shares. I don't know, man. Little just keep going. Here, dun dun, we have Spectrum Fund Class. I probably messed this up, but it's okay. I'll ask you to bear with me. I am not perfect, and I'm trying just for you guys. 2,901% return when they paid a negative 527,000 to get 551,000 back. That's a neat pattern. I'm gonna look at this pattern. Once again, we can see that middle of 19 they had various positions, very strong amount too, in my opinion. And for some reason during the squeeze, which I can understand, that kind of looks like what my chart would be. I'm over here with like just a couple. Couldn't afford it all. 2,901% when they paid the 527. We could see that they had 228 shares, and they almost allocated that full amount. Almost. So hopefully they just made a good return on their investment. And that makes it simple. Right below that, we see a negative profit of 53%. This side, this looks normal. That is a normal looking listing to me. You know, they came in, they ate shit, and they ate shit, and it shows. And it's there, you know, that's part of the market. Sometimes our investments do not work out, and that's part of the learning game. Here we have the J&L Series Trust, Multi-Factor U.S. Equity Fund. They made 2,880%, and that's May 27th. They paid a negative of $9.4 million to make a profit of $10 million. I don't know about that. Let's look into it. Reports 91.8% increase. That's the first thing that stands out to me. Let's see what the paragraph says. The current listing was 8,000 shares. They had a value of 1.6 million, and that is an increase, isn't it, of 106,000 shares. No, they ditched so many shares, and they had a lower value. That's interesting. Why would you ditch so many of this beautiful stock? Here we can see a very similar chart according to one that I've previously looked up just a moment ago to see that this is similar to another fund. So they positioned themselves during the squeeze, and they exited after this ridiculous situation that we went through. Let's see what they earned. On the report of 3/31 this year, they had earned 2,880% while paying negative 9.4 million to earn a 10 million. Directly before that, last year, they had earned a negative 42% on their investment. How do you make a negative 42% in this? They paid nothing, and they had a profit of negative 275%. It's interesting, because they had a negative allocation. Okay, I'm not sure how that works. Maybe you guys can explain it to me, because I'm leaning on you for the knowledge. I only know the numbers. Above that, we can see they changed this portfolio around. Change in allocation. To allocate something means to locate it or to move it. 232%. 232% allocation gave them 2,800% back. I need these guys to allocate my 5 shares for me. Yeah, I'd probably be able to buy you guys a couple. Global Allocation Fund, retail class, 2,400%. They paid negative 46,000 to gain 49,000. So let's look at that. Here we can see the third chart in a row to produce a pattern between different companies that have positioned themselves into our underlying. My favorite stock. It's all I own. Right here, the same thing. This is making me intrigued. Once again, you know, I can understand this. A cost basis of 3, a profit of none, and a return of 0. Equity class. The share says 500, and there's nothing there. I can't look up the 13F, but I could probably look into this company's actual earnings in the long run. They just got to become a bigger company. So I'm not sure how many of these I should go through for you guys. I mean, I'm willing to go through them all. I'll spend all day with you. 2,400% from BlackRock Advantage Small Cap. Damn, BlackRock is profiting here. They paid $8.4 million to get a profit of $3.2 million on top of that. And we can see that they paid $161 last month. Okay. Man, they might have done good. Report 3,876 increase in the ownership of GameStop. Huh. Previously, they had shares of 3,800 is their increase in shares, and the value went up 8,600% in the previous quarter. BlackRock, you killing it. Here we can see a very familiar chart that I'm willing to bet is going to keep showing up and coming into play. There's a reason that I can notice patterns. It's because I dig through all these dumbass filings. I'd like to show you guys how so you can too. And so here from their 13F endport reports. Now I don't know how to pull up an endport report. I don't even know what an endport report is to know where to find an endport. All I know is that 2,423% return when they paid $8.4 million and got $3.2 million back on top of it. I can't justify allocating these funds 7,000 times. I don't know. Why would it be that the report under that, when they positioned themselves again this year, that they had 1,200% profit on that? When they paid a negative 18 million for cost basis, and they profited 16 million on the maneuver. Change in allocation, almost the full amount. Intriguing. I'll leave it alone. You know. JP Morgan market expansion. 2,100% increase in our positions. And they paid negative 2.2 million while earning 5.3 million. That's interesting. I mean, if I got in at $100 or less in the middle of May, I would hold that position personally. But I've held my position, you know. Here we can see that once again, they have a positioning earlier in time. This would be middle to late 2019. And they decided to position themselves before the end of 20 and after. I would like to call that March. I believe the second run-up was actually in March, and that should be dead between February, April. Yeah, I'm going to say that's fair. We come over here, we can see that they actually, it shows, that same thing I just read, 21,800%, almost 2,200%. Negative 2.2 million to get a 5.3 million profit off of that position. In March, they paid average per share $97, and they changed the allocation percent was 1,100%. How do you reallocate your positions 1,100%? It's my personal opinion that what I'm able to see, because my dumbass paid $100 for this dumbass website, is that this is going to be the exposing mechanism to how these are traded back and forth on and off exchange in a way that isn't shown in any other way. So right below that, we can see they made, and this is for 2019, the end of it, 10% when they paid negative 10,000 and made 23,000. That's kind of an impressive investment. Okay, next. Here. Sorry, my dogs are loud. Here we got 2,100%. They paid negative 153,000. This is RESP. And they made almost 300,000 on that investment. Let's take a look. Shh! Barely! Stop, buddy, please. This is the wrong time. I love you. Here, sorry, that's my buddy. Here we can see October 19 to late 19. They position themselves. Once again, familiar pattern. We have end of 20 to about the same time. Barely. Come lay down, please. Come and stay, buddy. All the way. I love you. Sorry, guys. Dealing with life in the background. But you got me all day for as long as this takes. Here we can see for that time period in March where they introduced themselves here, that they had paid 2,000, or they paid 153,000 in the negative. So that means, doesn't that mean they earned? And then they had a profit of 300,000. Return 21,000% while paying $97 per share. That's not a bad move, man. It's really not a bad move. Let's go it again. T-Row. These guys were in my write-up. I don't like T-Row. 2,068%. They paid 42 million or 42,000, and they earned 62,000 in return. I find that a good return. Man, my dog. It's okay. I hope you guys are able to just deal with them and deal with me. We can see their positioning in the portfolio, that they came early, mid, late. It's just patterned. They got out, got in, got out, get in, get. And I'm saying that is how it works because of the change in allocation. They are showing us that this is being moved. We can see that they got a really hefty price in their volume. 55,000 shares. Oh, excuse me. Point. It's point. So let me just go directly to their volume chart. Their actual shares were $564. They made a 2,000% return on this while paying $42,000 and earning $62,000 on top of it. There's 816% change in allocation. That's neat. Right below that, we can see that for the end of December last year, They had paid nothing, earned 2,000 on 161 shares. I find that interesting. These are delicious prices. These are delicious prices. Okay, next. That was T Rowe. Here we have the moderate allocation fund retail class. They made 2,000%. FL Rux. They made 2,000%. VLU, the S&P 1500 TIL ETF. I would believe in this one. Let's look at them. Here we can see we're in the middle of 2019. They position themselves, and this once again matches the chart previously. They chose right there at the end of 20 and then to exit. But I question if somebody was going to position themselves here. Did they not like the stock? Why would you leave? The fundamentals are so good. I mean, really, they cleared their debt. The board is looking amazing. They're working on incredible things that I wish I could talk to you guys about, but it's all in the puzzle. It's all in the game, guys. I wish you would just play the game with me. 2,000% return, and this is for the period of March 31st. We can see that they made 81,000%, or 81,000 on a 53,000 investment. That's pretty damn good, right? They changed and allocated at 895%. That was for 726 shares at $104. I don't even think I have the chance to average down to that anymore. You know, I think you retail are really jacking up my cost basis. I really do. I don't even mind. I'll average down and then I'll average up, and I don't time the dips. I like the stock. Let's go to the one above it. Familiar chart. A previous position in the middle of 19. They introduced themselves between the early 2021 and the late 2020. Let's look at that. Exact things I said. Return of 2,000% on 97 shares. Change in allocation on these 97 shares is 175%. Here's a good one. 1,961% return. They paid $259 million to get $395 million back. This is on a put position opened by Jane Street. So let's go into these. Let's see what you do, Jane Street. Jane Street's been here a while. Man, that was when the other chairman was around. You know, I looked through the filings. I don't want to name them, but you know that you can go to GameStop's website, and they actually have all of their SEC files right there for all of you investors. It's a great resource. I would like to pay attention to this lump, so I'm going to look at that date because that stands out to me. And then I'm going to pay attention to this lump because this stands out to me. And there's time frames here. March, and I would dare say that March would be around here. So that's probably around April, May. We can look directly into their put positioning. They didn't really have any call options here, not in this position. But we could see that they increasingly took it on, man, middle of 2020. That's interesting that they would take such large put positions and call options if they weren't going to keep the underlying. That's all after 127 this year, 2021. So let's look at these. In March, they reported an earnings of 1,566% while paying $31 million to earn $61 million, but they change in allocation is 2,345%. How do you even reallocate your position that many times? I'm not sure either. This one sticks out, 331. Hey, that's a familiar date. Last year. I don't know what happened last year. I really don't. I wasn't here then. But we can say they made a negative 25% profit on a negative cost basis and a negative profit. That's interesting. That's just an interesting statistic to me. These are Class A shares. So let's keep going. We can actually look at their call options because I like Fintel. They make it easy. If you ever doubt what the earnings are too, there's a math here. I mean, technically times this to buy this, and it should match the number in the 13F. I don't want a number crunch for you guys. I just want to show you the patterns. 1,452% on this call option is what they made. That's crazy. They paid $198 million to earn $433 million on top of that position. Change in allocation was 2,000%. Let's look through to see if anything's funny. Triple negatives. That's weird. How do you pay a negative cost basis? Somebody teach me this. Negative cost basis, negative cost basis. Yeah, I need someone to teach me. Put positions. We can see that they made almost 2,000% on the March puts. That's simple. So in between December 31st and March 31st, that would be all reported on the upper positioning. We can see that for these puts, they paid 259 million and earned 395 million on top of that. That's interesting to me because they reallocated these puts 3,213%. Now, if I can, I'll take a moment and I'm going to explain the way that shorts work to my understanding. I could be incorrect, or I would say I am open to be adjusted in my understanding. Is that there's people who own the underlying. They have the Class A shares because they have the voting power, and they loan these shares to somebody, right? And the person that loans these, we'll just take BlackRock and Citadel as for example, because this is historically true, is that BlackRock would take the long positions on the board, correct? And they would loan it to their friend Kenny G. And Kenny G would then take a put position, and they would loan that put position out to among various, how do you even say it, investors. And do I say that they loan this out 32 times to achieve that percentage rate? I mean, how would they be able to do that without jacking up our price? That would be reflective in the price. So I dare suggest as a theme to you guys that the change in allocation is a sign of how many times this was traded on and off exchange just for them to put it back on the exchange so that this put could get assigned. I find that interesting. That is my theory, and I would like you guys to rip apart my theory, please. Here we can see a negative cost basis, a negative profit, and a negative percent. Interesting. And there's the numbers for you guys. The main reason I'm doing it this way is because that way you guys have the full access to what Fintel says before Fintel changes it. 1,922%, 1,800%, 1,849%, 1,018. This is all not correct. Here's a negative cost base. Let's go into that one. Interesting. I see an increase in their portfolio over time just to completely exit their position before the ride. Why would you leave? Don't get it. Let's look at their patterns. So equity class, we see that they've exited their position by this date, but previously they had 1,800% profit while a negative cost basis of 1.9 million, and they earned 2.7 million on that play, that time period. They were paying, that almost looks normal, 167 for 129. That almost looks normal to me. Almost. But they have a 400% change in allocation. So, you know, take it all for what it is. Here's a good one. Negative 16 million? You paid negative 16 million for your position. How do you pay negative? They earned 22 million for a profit of 1,700%. Let's peep game. Here we see a patterning of in 2019 they got in and they chose to completely leave by the time us apes showed up. And I don't even like to say apes. You know, I'm a player in this game. I am retail. I believe in GameStop, and GameStop likes players. 1,777% while paying negative 16 million and earning 22 million. Is there an investor that didn't profit off of these weird things? 392%. You know, that's change in allocation. They changed these positions. These changed hands almost 4 times completely. Interesting. A negative cost basis, a negative profit, so a negative return. But if you have a negative cost basis and your profit is negative and less than your cost basis, what the hell? I'm intrigued. I would like you guys to help me understand this, you know. Post anywhere you want on Reddit. Tag me. I'll help you out too. The Voya Index Plus Fund. They made 1,700% profit. They paid negative 41,000 to earn 1.7 million. Let's look at that. That's intriguing to me. They're disclosing an ownership of 9,354 shares valued at $1.75 million. Previously, they had 9.7 thousand shares valued at almost $100,000. That's kind of a good increase, don't you think? Yeah. but I don't understand why they were long. Maybe they got in here because they saw Burry and was like, I like Burry. Maybe not. I don't know. I don't really understand. How funny if you guys actually looked at everything. Burry didn't get in then. It's okay though. That's when he left. Sorry, I got jokes for you guys. I've read everything. I'm versed in this company. It's not my company, but this is my company. 1,734%. They paid negative 41,000 to earn 1.7 million. Change in allocation 1,135%. I would like to present you guys the patterns. Maybe we can discuss this as a community, how these dynamics actually exist. U.S. Vector Equity Portfolio. They made 1,700% with a negative cost basis. So let's go ahead and look at that. Once again, they got in August, middle in 2019. By the time early 2020, they reduced their positions, and by 2021, they had completely exited. So when we see this, once again, I'm looking for the change in allocation as my main thing. So right there. Oh, that gave me an idea. I wonder if they were playing the numbers, so if I sorted it by change in allocation, that it wouldn't show up in Fintel. Ah, I didn't think of that before. I wonder if that's the pattern. Here we can see on their last reporting period, 131, right after our squeeze, that they made a profit of 1,700% while paying negative 8.4 million to earn 10.4 million when they paid $167 per share. Okay, they reallocated that 241%. Damn. Is there a position that didn't profit off GameStop? Let's go that route. These numbers, I want my portfolio to say this number. Don't you worry, it will soon, guys. I promise. I'm just going to skip all of this horse crap up here, and I'm just going to see how many exiting positions there were, because that's a lot. I guess I'll just show you the numbers so that you guys can do pause screens and you can actually look to see which funds paid what for which profits on all of the exiting positions. I know a lot of you won't care about this, but there's going to be some of us that do, and I'm here to show it to you. Hey, when the world gives you a Jeffrey. Stroke that furry wall, huh, Betty? MetLife, they're in the write-up. Well, there's a lot of these companies that seem to be in the write-ups, no? Man, I wonder, you know, why would I have wrote all those if I didn't see that they were on the list of investors for GameStop, and there's a common thread and a pattern, but nobody knew it. Nobody knew it. They didn't understand what the power-up symbol meant. And the power-up symbol is knowledge. Knowledge is the only power. Knowledge is power. And we are players, and I would like power to be returned to the players. Look at all these guys. You guys can soak up all these names, tear it up. I don't care. I'm going to go back to what I was going to show you now. Let's go to the biggest loser here. JP Morgan Beta Builders. Neat. Goldman Sachs. MCF Advisors. Hey, Cohen and Company. This guy. This guy. Let's go up to the top one. They paid, exited at a loss, and that represents. Let's go into their portfolio. Oh, what? They paid $248 and still exited their position? That wouldn't make sense. Why would you go into it just to leave your position? Here we can see that late 2020 they positioned themselves, and then they repositioned themselves somewhere around 131. And we can see that a return percent because they entered. There's their cost basis, $96,000 on the investment. They made a negative 1,000% return, and they left. You know, they took a fat dump on this. Change in allocation is a negative 51%. I don't understand. They don't have it still, so I don't understand. Let's go over here. Negative 297% on the Goldman Sachs Small Cap Equity Fund that paid $2.4 million to earn negative $869,000. Interesting. When we look at their chart, there's a great pattern on the investors that are sitting into the GameStop portfolio that I'm trying to show you. And it's a time-framed basis based on profits, because we can see 129 Damn, 129. What a long day that was. 2,896%. They paid negative 3.6 million to earn 3.8 million on top of it. That doesn't justify the number. Here we can see both change in allocation 471% and 135%. This is, I won't prelude anything. Which one of these paid the most? Here's 7,000. We're going to go back to another Goldman Sachs fund. Okay, they made negative 99% on this position. Good. That makes me proud. Here we can see a pattern of a big lump sum earlier before in their life. I just want to get more retarded as I go. That's all I want to do. Here, later 20, they took a smaller lump in life. That's probably around 10,000 shares, maybe 12. And then they positioned themselves on the decline. They picked when it was going down for some reason. Let's look at why. That would be on this date. We can see that they made a profit of 3,210% while paying negative 12.7 million to earn 16.8 million on top of that position. They switched this fund's hands 468% worth of time. That means that this entirety left 4.5 times on the minimum. Okay. How funny. I'm almost hoping that I'm wrong so you guys can just talk about what I'm showing you. Hap Trading, Invesco. Invesco's got a good one because they had a cost basis positive and a profit in the negative. So that would justify this. Let's go into them. When looking at the chart, the pattern of investment, early 20, increasing position, exiting. We can see at the end of January 21 that in 129, I would assume, because that's on the decline, it might be on the 30th, that they had reintroduced themselves with 100,000 shares, a little over. Going through the portfolio, that would match up to this date. So let's look at it. 2,145% profit while paying negative 13 million to earn 32 million on top of that position, while exchanging hands 657%. That's intriguing to me. I don't get that. Let's keep going. You know what? This assortment's kind of boring to me. I would like to do this a little different because that's boring. Let's go over to average share price. Gee, Clear Street Markets. A return of negative, whoops, wrong button, sorry boys. They had a return of negative %, which is no return. They paid negative 5.7 million. They profited negative 2,000. None of that shit makes sense to me at all. Average share price, $21,400 per call. And really, that just, I don't like that. Let's look at it. Disclosing ownership of 17,000 shares with the total holdings valued at $3.6 million as of 6/30. Damn. Previously disclosing 96,000 shares at a value of 18,000. If only they had diamond hands. When did they buy these? Ooh, it's intriguing. They bought it before the shoot up. Interesting. Let's look at it. That doesn't make any sense to me at all. Just whatever, Fintel. Interesting enough, their equity positions look kind of normal, except for that negative cost basis. I don't understand the negative cost basis. But when we come over here to their calls, we can see that by the March 31st, they had reported a gain of 1,800% on a 9.3 million investment that they didn't profit from, but it was allocated 3,800%. That's sus. That's sus. They paid 9,000 per call, 20,000 per call, 21,000 per call. That's actually, I would like to go into this one. I kind of want to, just because the number of shares is 10. So for me to math that out, and for you guys to math that out, this should be an easy one. GameStop Corp. We have 3 listings. One of them is going to be for their Class A shares to show that they had 17,000 shares worth $3.6 million. They are the sole owner of these Class A shares. Class A should only come from the institutions on the board. Here we can see their local positions for their calls. And it's funny how I knew to look, right? So there's your call. 10 shares earn them 214,000. 279 shares, 5.9 million. These are their puts. Look at how much they're paying for the puts. That's impressive, right? Sole owner. So I believe that if we go down to the puts, the numbers are going to justify themselves. These aren't going to be filing errors. It's just people trying to spread doubt when I look at 1,800% profit on a $9.3 million investment that didn't return anything, but it was reallocated 3,820%. The value changed 2,909%. And they paid $9,000 per put on that. When we come up here to the 20,100, I'll just say 20.2 thousand on average, that they got a 10% return on a negative 4.3 million investment that gave them 940,000 back. What kind of an investment plan is this that would want to allocate your funds 90? It just doesn't make sense. Why reallocate 3,820%? Who are you trading it to? Who do you trade puts to get a $9,400 put assigned? How do you even get this $20.1 thousand put assigned? Gee, could you be like, I don't know, maybe trading this back and forth or shorting it to death through manipulation in the backgrounds while we're not actually on exchange, and then taking it to the on exchange to get this assigned to somebody that is only invested on exchange? Interesting. Planting seeds. Here we can go to CTC LLC, which I also did in my write-ups, that they had earned 8% while paying negative 216 million and a profit of 21 million. So does that mean that they earned 216 million by getting these $20,178 puts assigned? Who was the owner of the puts? Because wouldn't the owner of the puts gain that money? So 20,000 by 3,000. Damn, is this how they're moving money back and forth off the books in a way that nobody was ever able to look at? It's all in the filings, boys. If you dig too, you'll see this. They took a position, CTC did, equity-wise. Oh man, right when we wouldn't want them to. I would expect anybody that saw what we saw and got in like we did to hold their position, because it's patterned. Here we can see a higher amount of puts for the time frame and calls, and here an irrational amount of calls compared to the puts. That's not an investing strategy to match what they were thinking earlier, I'll word it that way. So when we come down here, we can see that they had 116 shares, common stock in their equity positions. For some reason they didn't profit at all. This just costs them money, and there's no profit. Change in allocation 100%, negative 100%. I don't. Okay, interesting. Here we can see that they had paid negative 44 million for 16 million profit on top of that for a return of 11%. But if they had, I don't understand. I'm just going to ignore that one too, just like the other day. All I'm going to look at is right here that they had paid $20,174 per call, which means that those calls got assigned and somebody owned them and they made a killing. Come over here to their puts and we can see something very similar, that this position only made 8% profit while paying negative 216 million for a $21 million profit. What? Here we can see that they paid 20,178 per share on average. Interesting. I wonder who got paid that. Alright, then we come down again. Average share price. It becomes to be normal. So let's resort this in a different manner now. Let's sort it by the puts. We can see the negative percentages aren't present with the puts. Everybody seemed to gain off put positions. When we look at how much they paid for these put positions, aren't the top ones a pattern? Negatives to profits. Interesting. What's your time frame here? They paid $20,178 last month per put. Damn, bro. Now, if we know that historically that BlackRock is on the board, which they repositioned themselves this month with 11 million shares and then loaned out the 2 million shares, and if that 2 million shares was then open to create put positions, but they're changing the allocation, or they're allocating it back and forth and back and forth and back and forth, isn't that the dynamic of shorting? Like, isn't that the dynamic that's based around naked shorting? I believe it is. I believe it is. We can see that each of these positions was profitable. Let's find a non-profitable put. These guys did good. 50,000 almost. I'll say 49,000 and round down. These guys made fucking almost 3,000. There we go. Now we have negatives. Cohen took a negative on his put positions. Let's open that up. Disclosing ownership. 0 shares. Total holdings. $0. That's up this month. But it was 111 at a value of what would that be? Like $200 ish. You see it early 20, he hopped in, got out. Mid 20, he hopped in, got out. But he sure held a lot of puts. And by he, I mean this entity, this person, as Delaware likes to call corporations. That right here again, same time frame of his position. So maybe he used his position to open puts. But even then, how do you open up the calls without owning the underlying on future dates? Let's look. Yeah, see? Shares changed, negative 100, negative 100, negative 100. Shares, 100,000, 100,000, and nothing had a share price. There are no share prices. But it did have a cost basis. That's interesting. And he didn't profit nothing. I'm going to go over to his calls, for whatever reason. It's broke, so I'm going to go into his positions. Go to the info table. That's going to hold all the positions in the 13F of what this company is holding in their underlyings. And I'm just going to do a search for GameStop. Now, from now on, what I'm going to do is these Class A shares, they lead me to this CUSIP, which is essentially a reference number for GameStop. It's a short and sweet. We can see that they paid $21,000 for 111 shares. They paid $18,000 for 69,000 puts. What? Okay. And he's not the sole owner. So he's the one working them for someone else. These are somebody else's shares according to that phrase. Interesting. When we go into his put positions, we can see that he recurringly took a loss on every position that he held. I'm not sure that that's a loss because it's a negative followed by a double high negative. So maybe he actually did enter, got paid, and then it doubled down to a negative 50%. I'm not even trying to math the negative cost basis, and I need people to bring this up in Reddit and explain it to me. But I can show you that at March 31st, he reported an average share price of 41 cents. Here, 2 months ago, his puts, 14 cents. How do you have a negative return on 14 cents? Man, I'm not sure. I think they're betting against the company, so I don't mind seeing their losses. Add a little more to it. I'm going to go up a couple. Hap trading, because I don't know what they are. Negative 3.9 million to earn negative 10 million with a negative 70-cent return. That's interesting to me on a put position, so let's go into this. Here we can see that Hap Trading has 0 shares, 0 disclosed value, but they used to have, exactly, when were they invested? Probably around August, which I would have held that position. Oh man, I believe in the company. Wouldn't it be cool if they like got into retro things and like started bringing us all the cool stuff back? I really hope it happens. Here we can go over and see that they took large calls positions over the time period of that, and then somehow they were taking put positions without owning the underlyings, which okay, whatever. I mean, that's what outstanding shares are based on, is being loaned. And we can see that they took an ever increasing put position against GameStop during the period of what, early 2019 onwards. Interesting. Did you profit from it? Disclosed equity positions, 1,861% profit when they paid 7.7 million to earn 4.9 million. The price, no prices, but their shares is 382,000. So let's go into their 13F and see what the prices say. I'm going to do a Control F and then put the CUSIP. That will take me right to GameStop's holdings. We can see that they had Class A shares and that they were the owner of these shares for the puts. Right there, 1.56 million shares of the board shares, so they had voting power, and that was worth 5.6 million. Over here we can see sole owner of these shares. They had 382,000 shares, and the value went up to 12.9 million. Interesting reportings. That's on their equity positions. So when we come down here to their call options, we can see very recently, March 331, where were they in the call option list? They were there. We can see they made 2,800%, a little over, and they paid negative 3.7 million to earn 36 million back. What a great return when you allocate your position 4,898%. That's neat. Especially when in March you can get your calls for $35. Bro. Coming over here, we can see on this time period of 9/19, we'll come over here and we'll look for 9/19. They had a very slight options opens. We can see that they made 1,100% on a $30,000 investment where they made 60,000 on it. That is not 1,100%. That is a almost 200%, give or take a little percent increase in your value. That doesn't make sense. So when we come over here and I say, oh, they allocated it, 1,700% is the change in allocation. They allocated this over and over again. That's interesting, especially when you can get your calls for 45 cents. Can you guys even imagine if we could get our calls for 45 cents? Look at this. Negative, 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 negative. Good. Oh, shoot. Need more coffee. Going through their put position, what I'm mainly looking for is the change in allocation with puts. 300% change in allocation for 183% profit. 576% allocation for a profit of over 600%. We have a negative percent change in allocation. Someone please explain that to me. Now, an allocation of 1,000%, that seems suspicious to me just a little bit. That would be for March 31st, 2021, when they made 715% off of these ports. I mean, really, if you're going to play puts, why not make 1,888% off your $1.1 million investment where you get out of it with 4.2 million in the middle of 2014? Damn, could it have to do with that they allocated it 1,999%? Who are they allocating it to? Where is it allocated from? Who in the world, the 1 month after a 13-cent put, that they're going to have $1.92 get assigned? Okay, whatever. I know about assignments and how things can be shuffled. Now, can you imagine that if I opened a put position and it was at $1, and you bought it from me for $1, and then you put it for $5, and I bought it for $5, and then you put it for $10, and then I bought it for $10, and then you sold it to your friend Frank for $20, and Frank sold it to me for $40, and then I sold it to you for $60. Is it possible that they have different IVs on the dark pools? I think it's possible, because they're paying negative 3.9 million cost basis for a negative 10 million investment. That's profit? How do you have negative profit? You guys suck at investing. That's interesting. There's a pattern here that I tried to show. Here, let's just start doing this. B of A. Bank. Where you at, baby? 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23 different banks invested in GameStop? Why? Do these guys play games or what? I don't understand. I don't understand. I question this. So let's go into these guys' whole portfolios. Let's see who Clear Street is. Oh, I see they're killing it on their portfolio. Look at that. Another fund that they're into off of their puts in there. They made 20,000% return on a $46,000 investment where they walked away with $413,000 on top of it when they allocated it 17,275%. Bro, the value changed 22,000%. Average share price per put 4.2 thousand. Let's sort this by average share price. Their top two positions into Amazon for the put is $326,000 for 12 shares, and that's average, so that's per. And then we're going to come over here. They made 28% on this move. Nice, 235% change in allocation. Now here's what I wanted to show you guys, because maybe you could just scratch my head for me. When you make 9% return, and you pay $244,000 to receive nothing back in profit on the last reporting period, how is the percent allocation infinity? Have you guys ever seen an infinity symbol in these? Here's Tesla. Infinite percent allocation. Is that in here anywhere else? Or is it just those two? It's funny because this is my way of showing you their whole portfolio and to show you that the prices that are assigned for each of these puts and calls isn't natural because I sorted this by share price on purpose. And I dare present to you the evidence that you need to make this GameStop. I mean this. There's something very wrong here. Let's go into the next one. Let's go into CTC. Ooh, look at that value. Look at that value. That's not even intrinsic, is it? Yeah, GameStop's got intrinsics. I like intrinsic. It's funny, I like it when it's intrinsic and extrinsic. 814% return for a change in allocation of 1,300%. So let's sort this by the allocation. Oh, look, we have a thread, common thread. An infinity symbol. Really? They have infinite change in allocations on these shares for Tesla, NEO, Google, and the SPY? Interesting. Let's open that up and look at their positions. Oh, look. January 20 calls, and that's the related positions. Interesting. So just because I don't know what the hell this is, I'm going to go into it. Can we see anything? No, we cannot. Is there any helpful information? Nope. I don't know what the hell that is. It's interesting that I get to do this and show you guys that this has been a learning process. I didn't go to school for this. I taught myself. So hopefully I know enough to be helpful to you guys. Here we can see a really freaky chart that for some reason seems like, yeah, that's really huge. Man, if you could get into S&P, if you could get in the SPY here, you know, or even here and take your puts out, that would be such a good play for profit, right? Let's look if that my thesis stands. They were taking puts and they were trying to open positions with calls. Okay. Let's see what they earned. Return percentages. There's a negative 94% on their investment. That's interesting. Change in allocation, 100,000. Why would you do all these if you didn't want to be positioned? Negative 577 million to earn 90 million profit on top of it. Change in allocation, negative 50%. Here's a value change of $1 million. That's actually pretty good for that time frame, I think. They probably did good. I'd like to just go down to their options. Disclose call options. Allocation percents look actually quite normal. Those look normal to me. The returns look kind of normal. This one, I'm not so sure about this one. When is that? How funny, it's freaking March. It's always March. I don't know why it's always March. Value change, 50%. Change in allocation for this month was 11%. Why are all the changes in allocations negatives? Please, somebody just butt heads with me and teach me. Here, negative. That one stands out to me. That's funny. It's freaking March. Yo, why does that one stand out to me? They paid 18 billion to receive a profit of negative 8 billion. Change in allocation negative 5%. But the S&P put average share prices? Do you guys see these prices? Who is getting paid when this gets assigned? Call prices 25 grand and above? Who is getting paid? Let's go look at the damn chart, man. Is that even natural to their price line? 440 for the at a high. What's their low over here? Go to their other chart for that. We had a low of around $240, and that's odd to me, man. Early 2020, there was a low of $240. I mean, please just go into your options, right, and see if you can even try to order book a $41,000 call. You know, I know some of you guys got S&Ps. Yo, just try to open a $41,000 call and explain to me how we can do that. Let's keep going. Here's Google Alphabet, and they're positioning into this damn infinite symbol. Once again, old positioning, same, there's pretty similar chart, pretty damn similar chart, especially when we compare. Am I really going to do it like that? I think I am. Let's compare the four of these together congruently. So first thing I'm going to do is I'm going to open these and I'm examining the trends in the chart. We'll do a little bit of TA here, because in the middle of March 2020, that this started to rise, and it should have cyclically, due to the laws of mean reversion, came back down and oscillated, and that would have been normal growth. But there's something going on in March 2020. Isn't that when the stock market shut down as for this decline? Please comment and let me know. Nope, this one looks way different. You are useless, and you are useless. How funny. No charts on those. S&P, please come back. Real similar chart here, looking at March 20 and then going to the moon. Why is our ETF going to the moon? This is NEO's positioning. CTC's positioning inside of NEO, which had an infinite change in allocation, which didn't make sense to me. To say disclose equity positions, here's their call options. We can see that they took a negative 65%. That's funny because March, it seems to be a negative profit for anybody who took out any of these call positions, correct? Whether it was a call or whether it was a put. Which is crazy, because is that because they paid their bigger bro $4,375 every time they opened a put for 12,139 shares of this? Or, well, no, it couldn't be, because they had a cost basis of 56 million, a profit of 25 million, a return of 54%. This doesn't make any sense. Reallocation 168%, but the price is 4.6 thousand per put on 24,000 shares. Okay. I hope that I'm showing you enough in the background of GameStop to show you how certain people are able to take out certain positions that just don't make sense. Profit on this position. This was in March 31st of 2019. 1,821% on 118 million investment that gave 7.5 million back. But they reallocated this thing 27,000 times. That's 27,000%. What? Okay, well, to quote me from the other one, we'll just ignore that. Let's keep going. Oh man, these calls. Look at the $247,000 for an Alphabet call, guys. I hope that me showing you these numbers, that this is enough to really show you that something is very wrong here. There it is. 6,387% change in allocation for a positive profit. They paid $139 million to earn $646,000 back. That does not justify that profit number. Now, what did they pay on an Alphabet call? $103,000, almost $104,000 on average per call, because it says average share price, which that means per. They paid $247,000 to the seller of this put when this put got assigned to CTC. So the question is, who historically borrows from the board's members, the investors? I'm just going to back out of this because I'm sick of looking at illegal numbers. This was CTC. I'm going to go back. Now, knowing what we know about the way that this high share price is averaging and working, let's go back into Clear Street Markets. Now, let's do the same exact thing of looking at 17,000% change in allocation, 65,000% change in allocation, 15,000, 100. I'm sorry, my eyes glitched on me. 6,500%. I'll correct myself. 1,500%, 1,400, 1,000. Why would they be allocating this back and forth? Is it to create exorbitant amount of profits, not just for them, so they can hand it upwards in the stream of things by whoever's selling these? Because if I could sell one of these and just sell one, I could buy you all a share of my favorite stock. Man, especially if it was per, 2,316 shares. That seems like a hell of a flip. Looking at their puts alone, let's look at their change in allocations. Is everything under 100%? Nope. Everything is drastically all messed up. Oh, I need some water. 1 second. There's a negative 140%. That's a bad move for you. So, I'll take this back to my stock so I'm not focusing on these stupid ass things that I don't care about. This is the only thing I like anymore. Do you guys want to know who sold what where? I'll show you the insider trades as well. Number of insiders buying, -1. This chart might not make much sense, okay? But what it's going to show is positive shares, whether they were planned, unplanned, or unplanned sales. And we can see that back when they only had 2 planned actions, which is kind of interesting. Here in 2019, we could see they had unplanned buys, which I'm really curious what GameStop bought in 2019. That might have been the Think Geek thing that they went through, but I am not sure. In case you guys didn't know, GeekNet is a subsidiary of GameStop. It's essentially the ones that make caffeinated soap and all the cool gamer items that you can see all over the place. Great company. Man, they're doing awesome things, to be honest. They make the goofy, funny commercials on YouTube, too. And so we can see here, unplanned sales, as in they did not plan in the beginning of 20 to sell anything. And they did not plan in the beginning of 2021 to sell anything. I wonder who did. Let's go take a look here, because we can see which of these insiders made profits on their positions. Elizabeth Dunn, she made 96% up. That's pretty good, right? Cohen, God bless your soul, brother. I believe in you, Chairman. He hasn't left a thing. This man is GameStop. I believe in him fully. We can see that Hogan, he made a profit. He exited a position. Gerald, I'm not going to butcher your name, old director. I can't speak Russian. I don't even know how to say that. He made 109% profit off his positions. Carrie Tefner made 100% profit off of her positions. James, I'll just call you James, Mr. James. You made 134%. I mean, these directors made good pursuits off their profits, right? Let's look at the chart and actually see what they were doing. Because this, I really find this interesting here. Reported shares increasing over time. Reported share price, adjusted share price, price at maximum. Here we can see in their chart who did what when. 2020, 4/17. That positioning is still here. Do you guys see this chart? Do you guys see this chart? Do you see it? This is for you, fucking Roaring Kitty. This one is for you. Because to me, that chart is your holdings. And when everybody wants to talk about profits, oh man, from the beginning of 2020, why don't we talk about return of investment? over a diamond-handed person's investment because we exist outside of the framework of time. We're long, you know, and whether there's an institutional squeeze or not, I honestly don't even plan on selling anything. I believe in what they're doing so much that I will never leave. Period. I would like to be an investor in all of their planned board meetings, you know, because we get to go to that once a year meeting when they start doing stuff and it's cool. So here we have a time frame, days from date to trade, where this individual blew 21, 623, ate shit on their whole lineup. So according to that date, 623, who is that? James Grube. Oh, okay. Price at minimum 146, adjusted price 217, with a negative percent loss avoided. So he got paid. I would understand that. I would understand that. That would make a little sense. Days to minimum 4,200 days. You know, I'm not sure about this. And then we can see over here, he sold his negative 1,900 shares. He has 2,000 left, but he paper-handed those things out. If you believe in this, here's George Sherman. Hey, bro. Taxes. Negative shares changed, which makes sense. He got rid of positions. He had to. Taxes. So let's go down here. And this is the insider traders. And we can look at what each and every one of them did directly before our squeeze date. So let me find our squeeze date. 21-1-5. We can see that Raul Fernandez, Class A common stock, paper-handed a lot of his shares. That doesn't make any sense to me. Why would you? I mean, who'd you sell them to? Real curious, Paul. Who did you sell them to? And I'll open up the Form 4 for you guys, just so you can learn what a Form 4 is about. Now, what this is going to do is be a transaction history of the statements and changes in beneficial ownership. Form 3 and a Form 4, these are very useful forms to understand what these positions are being moved around and priced at and how they are acquired or disposed. And when we come over here, we can see Section 4 says securities acquired or disposed, and instruments 3, 4, and 5, which is these rows. So we can see that he disposed of his shares at $33, at $40.1, at $36, and $35. And we can see the amount that he disposed and that he sold them. Period. And we can see the dates that he did it right here. And we can see what kind of stocks. So we know these are board stocks. Only the only the silverbacks get the Class A's. And it's funny, I'll only call you a silverback if you don't dispose of your shares. Respect, Cohen. Let me come back over here. James Wolfe, he sold his shares for, I don't know why he sold his shares. Let's look into it. I'm going to go to their document 4 and I'm going to look at his transaction history. SJ. I don't even know what a J means. That's how you know I'm learning. But I'll share with you what I do know. I know that he disposed of 560 shares at $19. Why? Man, this guy had no vision, did he? Oh, I like people with vision. This game sucks. I don't like this game. Let me keep going. Let me just go all the way down. Maybe we can see who the old chairman was. Tony Bartel, Michael Mahler, Tony Crawford, Daniel DiMatteo. Interesting old names here, man. Class A common stocks, gifts. Tony Bartel. Hey, man, Christmas is coming. Gift me a couple, please. You want to see where they went? Let's look at where they went. And that's 2013. I'll end up wrapping this up in a moment. Honestly, I hope that this has been smooth enough to really explain what I see all day and why I am focusing into the things that had a Power Up logo next to companies to show you guys that there is knowledge built into these, and that I was the only one to look into the messages and to see the hidden meaning behind what you were seeing, and nobody could see the depth of how we were being talked to, because it wasn't in a normal word form. It was in a puzzled form. And nobody played the game but me. And so the reason I made this video is because one friend who had the diamond nuts to stand up and say, I like stocks, and then to later go and put all his efforts in to go, you know, this company right here, I see extreme upside. There is potential that is undefined, and all they have to do is these certain amount of things, and if he could do that, man, this company could grow to be into something great. This could be the future of video gaming across the entirety of the internet in a way that is yet to be done. I believe in that too. And he's under, I believe he's being litigated. And our other friend, the chairman, he's under agreement that he can't even put a word post. Like these guys can't talk to any of us. They're not allowed to, according to the way that the game is being played. But the goal is that I'm allowed to. So this is my ode to you, deep fucking value, Mr. Mr. Keith Gill. You are my hero, and I respect you with my entirety. And since you can't do this, and I'm not good at fundamentals, and the technicals are for all the people that actually can study the charts, I know that the chart is fake right now, and the numbers don't make sense. And I'm trying to show you why. There's a lot of things going on in the background that just won't make sense to you guys, and all you have to do is just be patient and try, and you'll learn. But I can't do fundamentals because I didn't go to school for this, and I can't do the technicals because everyone's better than me. What I am good at is patterns and numbers, and when I see certain things, they speak to me in volumes, and I don't like these volumes. This isn't the language that I want to see. My name is Ray. I go by Always Sad But Truthful on Reddit. I've been around the community. They've all called me Red Pill Ray because I was the only one to stand up and to be like, no. I think I see something here. There's something in this company. I see potential. An extreme upside that I can't even define to you guys. Because it's never been defined. There is no ceiling, and they removed our floor. And at this point, I'm kind of demanding our building back. I really hope that this has been worth your time, and that I have explained what I have seen clearly and patiently enough for this message to be delivered. I've come to love you guys, and I took the time today to explain this just so you could understand it. And so with that said, I have one last message for you.
You shot yourself?
Yes, but it's okay. Marla, look at me. I'm really okay. Trust me. Everything's gonna be fine. You met me at a very strange time in my life.